So in today's video, I'll be breaking down a trade that was taken on the pound yen last week. This was a trade that was shared with the members. If I just head over to the Discord, you can see right over here in the mentors chart section. The trade was broken down in a weekly market breakdown. And as you guys can see, this was my personal trade. I closed out at 1 to 4 for £4,000. And the trade ended up coming down to final TP. So let's get into this breakdown. Just before I start off, I wanted to let you guys know I am now offering a service. If I just bring it off for you guys right now, I'm now offering a service where we will help you get funded. We will pass your challenge for you. Head over to the Telegram. I'll leave the link in the bio and you can see all our testimonials right over here. Here are some of the challenges that we've passed. As you guys can see, this is some of our clients' accounts. We've done 10% in just under 1 day. This is just one of many. Some of our clients' payouts right over here. And if I carry on scrolling, you can see multiple accounts being passed by us. So what is the deal that we have to offer? You do not pay us a penny until we pass the account for you. Once we pass the account for you, we will then charge you a fee for $299, but it does not stop there. You might ask, what happens if we were to fail your account? If we were to fail your account for you, we will personally reimburse you with the money you spent on the challenge fee. And not only that, we will reimburse you with an additional $500 for simply wasting your time. But anyways, let's get into this market breakdown. So here we're on the pound yen. And let me refresh price back before it mitigated into our POI, just so that you can see my thought process before price tapped into our area. So let's clear up the chart right here. So first things first is we're going to head over to the 4 hour. And I'm going to show you guys what I had seen. So number one, we had the price cycle. Let me just mark that out for you guys. So we had our consolidation. Then we had our expansion. Then we had our retracement to fill in any inefficiency. And then we are expecting a reversal to fill in any areas of imbalance below or take out any levels of liquidity. So as you guys can see, the price cycle played out over here and price came into this 4 hour area of supply. Once price mitigated into this 4 hour area of supply, we then broke down to the lower time frame to wait for a confirmation entry, and we found one on the 30-minute. So what can we see with this 30-minute price action right over here? Price very nicely distributed over to the downside. So if I just take out my brush tool, you can see price very nicely distributed after mitigating from the 4 hour area of supply. Now that we've determined that price has distributed off of this area, we knew that price has more potential of dropping even lower because we have some areas of liquidity resting down here. We can see some area of support. And not only that, we got all of this inefficiency that we can expect price to fill. And in addition to that, we have some areas of demand that we know needs to be mitigated. So with all of those confluences, I knew there was a lot of magnet for price to come to some lower levels. Now, looking at this price action right over here, what do we see? Number one, price previously took out some areas of liquidity before mitigating into our 4 hour area of supply. Let's mark that out as an area of liquidity. Price then impulsed over to the downside, taking out the previous low. We mark that out as our change of character. Once price broke the low, it started to pull back and form some areas of inducement. This right here is what we would call inducement. This is a structure that price tried to continue, enticing some early sellers at this area of supply. And as you guys can see, anyone that got in at this area of supply ended up getting liquidated. Okay, so we mark out this area as an area of liquidity. What did I then do? I fibbed up the high and the low of the price range. And as you guys can see, the 30-minute area of supply aligns nicely right in between the 70.5 and the 79%. So I ended up marking this very nice area of supply here on the 30-minute. Entry at the open of the candle, stop loss at the top wick off of that candle. Then as for TP, for our TP, we got multiple areas to target. Number one being this area of support right over here. This is a buildup of a lot of liquidity. Now, if I just take out my arrow tool, we have that double bottom in addition to it. So we've got some equal lows, a lot of liquidity built up at this point, all of this inefficiency and this area of demand right over here. Okay, so we have two areas we can look to target. And entry will be off of this 30-minute area of supply. So then what did I do? I set my limit at the open of the 30-minute candle with my stop loss at the wick of that candle, and TP1 being at this area of support. And let's see what price ends up doing. You guys already know the outcome, but we'll let it play out. There we go. We got the mitigation into our area of supply, and boom, TP1 was hit. And our final TP, which is the one I shared with my students, was at the area of demand. So let's continue playing price and see what happens. And there we go. Price ended up coming into our TP2, smashing our final TP at a 1 to 6 risk to reward. I personally got at a 1 to 4. Okay, so that's all there was to this setup. You guys already know this entry model because I share it every single time in every single one of my YouTube video. If you go to my previous YouTube video, you can see that I broke down this exact entry model where price takes out liquidity, taps into a higher time frame area of supply, breaks the low, pulls back, creates some area of liquidity, takes out the liquidity, taps into our area, our premium level of supply. That is our confirmation. We get in and then we target some lows or some areas of liquidity or some areas of inefficiency. Okay, so I'm using the same entry model day in and day out, and you guys can see the profitability of this entry model. Anyways, guys, I hope you guys enjoyed this little breakdown. I hope you found it informative. If you do have any questions, feel free to drop into the comment section, and I'll try to reply to you guys when I can. All right, guys, enjoy yourselves. Take care.